It's time for the big three. We've got three stocks, three charts today. Rick Ducat will take us through the charts. Here to take us through his picks today, Tim Bohen, Chief Technical Trainer at StocksToTrade.com. Tim, great to have you with us. We've got a red day for your day on the big three today. We got that hotter than expected PPI this morning. What are your thoughts on what we're seeing in the markets today?
Well, my thoughts are kind of related to one of the ideas that I have for you. The news dropped last night on Block's earnings, and basically Block XYZ cutting roughly half of their workforce. And I think that that is kind of reflected in the market today. Now, I know it's just one stock, but there's all of this anxiety out there about AI replacing jobs, replacing workers, et cetera. And now I think there's a different story with Block that I'll come back to. But, at the end of the day, we know that since COVID, the market is very driven by retail. I mean, like the explosion of retail trading over the last few years is, in my opinion, kind of taken over, the steering wheel of the market. And when you think about all of these people with, good paying white collar jobs, there are a lot of people that have money in the market. And if they see stuff like Block, I think that brings in anxiety. The market hates uncertainty. So I think a lot of people might be, pulling back because they're worried that maybe they're working at the next Block, et cetera. Now, what excites me as a guy who hasn't had a job since he delivered pizza in college is the trading opportunities. I just think that, unfortunately, I don't want anyone to lose their job. I think a lot of these tech companies are going to be following this to, basically improve their balance sheet, get people excited about the stock. And, you look at Block, the 5-year chart, basically upper left to lower right, the first appreciable bounce is today in the last 5 years. And I think it's a good company. I respect Jack. I think he's a great visionary, but kind of like Apple with Tim Cook and Steve Jobs. Steve Jobs was a great visionary, not the best manager. And I think that's kind of what Block needs. But that being said, I just think there's a lot of fear around that first wave of supposed AI job cuts.
Certainly, and it's a narrative I think a lot of people are trying to fight as well. Say, oh, no, we won't replace humans. They'll work alongside humans. And here's our first concrete example of replacing nearly 50% of your workforce. They say they're doing it proactively. But I would like to get your thoughts, too, before we take a look at the technicals on Block here, Tim, just about how much of this move was taken out of the Elon Musk playbook, because Jack Dorsey and Elon Musk have a pretty well-documented relationship. And he did a similar move at I think it was still Twitter. It may have been X at that point, but early on in the early stages of that transition had a similar move there. But also hard to ignore the other point you brought up, that other companies are going to see the reaction to this announcement, and it may make it look appealing.
Yeah, I mean, I look at like one of the first ones that I thought of this morning is like Facebook. Facebook has like 75,000 employees. I'm just like, wow, is that really necessary? I wonder how much Zuck is looking over at Jack and saying maybe, and Elon, maybe I should do the same thing. But, that's, I think, as you mentioned, when Elon bought Twitter, first thing he did was come in, cleaned house. And I mean, I'm a heavy Twitter user, been using it for 15 years. Like, it got way better, way more features, way more, traffic, et cetera. So I think a lot of these companies, especially tech companies like a Block, again, I will say it over and over again. I don't want anyone to lose their job, but I just think there's been a lot of fluff added to these companies over the last year. They're just kind of hiring because the market's been hot. They got money flowing in. Let's just hire for something to do. And I think Block got ahead of itself. And I'm guessing no Block customer will see any difference on Monday or the week after that. And it just improves the prospects of the company long term, and hence the stock.
All right, Rick, so let's take a look at the technical setup here for Block. Even with this move that we're seeing today, they are still trading negative on the year. So what's the technical setup showing us when we look at this chart?
Well, a big push to the upside, obviously, here, but still one that remains within some boundaries that we previously could have highlighted here. For starters, you can see we have this trend line connecting these 2 points. That's about where we've topped out so far today. So if you were to extrapolate it, put it across the lows, it gives you this channel type shape here between our two parallel parallel lines. We can also think about some horizontal price levels that stand out. First, we have relative highs here near 68. That might be a potential stopping point to the upside, but also 72, a consistent floor, and then the starting point for a major breakdown. Then it was tested once more as resistance. Old support becoming new resistance is a common theme that you see in trading here. Certainly doesn't play out every time, but in this case, it's pretty obvious that that was the mark to beat to the upside here. Now we can see as well the low that we established around here near 58 then became resistance once more. We dropped off following some of the information that came out in the previous weeks here. Then we formed another high near 55. So 55, 58, 68, and 72. Those are kind of the important price levels to keep in mind based on our prior activity. Now, when we look at our moving averages, we have in one fell swoop taken out 3 of our moving averages, and well, I guess 2 fell swoops. It was 2 days technically here, but we took out 2 of them very quickly, rapid succession here with our gap up. 61 is roughly our quarterly EMA in gold here, and 67 is our yearly EMA. So those are 2 convenient areas to look for support or resistance here based on those moving averages. Now we can see that RSI has crossed above our 50 midline here. So look for price to take out some old key levels, and for RSI to also push into the overbought area. That would be a sign of further strength to come potentially. Now volume profile shows that the heavy concentration trading area here, 61 to 66. Price is kind of right smack in the middle of that. Things pick up again here, 58 to 55, and then things are much quieter until we get to about 75 all the way up here.
All right, and right now we're trading about 13% higher on block, around just under $62 right now. Have given up a little bit of the move to the upside that we've seen, but still heavily positive so far following that layoff announcement and its earnings. Want to move to freight now, Tim? Your next pick, CSX Corp. Take us through this one.
Yeah, so the 3 ideas, obviously, like every week, I kind of sandwich with 2 very speculative. The middle, CSX, really a safe play, but this is one I shared a couple weeks ago on that breakout, basically that break of that triple top right there. Just been marching along nicely, and you'll see in all of this data of freight, expanding in the U.S. Saw a tweet a little while ago that the USA now produces more oil than Saudi Arabia and Russia combined, and more natural gas than Russia, Iran, and China combined. So that freight, that reindustrialization of America I've talked about, plus oil and gas, it's got to get to the ports somehow to be exported. It's got to get to the refineries. So I just kind of view CSX as, like I said, sandwiching that kind of safer play for a stock that maybe, some of the viewers aren't in love with. Something more speculative like XYZ or the next idea.
All right, Rick, so as we look at the technicals here on CSX, wow, I can see a really steep upward channel here. Take us through what you're seeing here.
Right, so what we had in this one, around 37 here, 37.25 to get kind of granular. A repeated high point here. We had kind of this W-shaped price activity that gave us this triple top, and then we started to push above. The resistance became supportive. Then we took off to the upside here. So today we took a little bit of a dip out of our channel, but we seem to be right on the border of that trend line once more here. We had our highs 42.82 that still stand out. Along the way to some of the pauses that we saw, some of the high points, 41.73 right about there, and then a high and then subsequent low around 40 as well. It can be kind of tricky to find relevant points during a climb that is so steep and so quick, but those are some that stand out as potential ideas of places to watch. Now we can see that our 5-day EMA 42.35, our weekly EMA in dark blue, is around where price is sitting right now. 21-day EMA in teal, our monthly EMA 40.80. So that could be another potentially supportive area. A little bit of a bearish divergence here as well. RSI showing slowing momentum despite being in the overbought area here as price made higher closes. So a bit of a mismatch there, not exactly what you want to see if you're bullish in a name, but at the same time there's nuance to this. It doesn't just mean price is going to collapse. It just means things are slowing down and we're starting to take kind of a pause. So this could be merely a consolidative phase before the next leg up. it would be another way of looking at it here. So wait for some kind of price breakout to help solidify and help inform your trading decisions. Volume, pretty clearly, this is the main area. 35 to 37 roughly is the obvious heavy trading area that matches up with a lot of the time we spent in our range. A little pocket up here too between about 41 to 42. That could be another foothold in the shorter term.
All right, and right now we are at 42.54 for CSX, pretty much flat on the day. Your last pick today, Tim, we know you love space. We've got a space one here, AST Spacemobile. I know you like this company, so take us through why you're even more bullish on this one.
I still remember a few weeks ago when you asked me if I was ready, I was going to be like the first guy to live in space, and I said I hope so. But yeah, listen, it's a sector I've been very, very bullish for quite some time. But ASTS kind of first showed up on. I built an AI to look for kind of like hot sector theme stocks, and this first hit back last summer in the 30s. Obviously, been a little choppy, but uptrending since then. Now, what I like about it, I always want to anxiously wait for Rick's breakdowns, but what I see is a stock that kind of fell apart, had a little bit of a rough patch after the breakout, but starting to build a nice base here. And what I like about it is, it's kind of a sympathy play to the SpaceX IPO, which is, we still don't know exactly when, but it's upcoming. I just think a lot of people, as that hype continues to build around SpaceX, are going to be looking for these plays that they can trade right away. And if ASTS can hold this base right here, as long as it doesn't break down, I think it's got a great chance of kind of retesting those recent highs. Again, really just kind of tagging along on the hype of SpaceX.
All right, so as we tag along on the potential SpaceX IPO and a move that we might see alongside of that, Rick, what is the technical setup right now for AST Spacemobile?
I mean, the possibilities of space are infinite. There's so much to see. We couldn't even understand what could happen yet. So an interesting idea to be sure. But what we see here is here's kind of the ascent that Tim was talking about. We reached our highs 129.89. That was around where we had our best close was 121. So it can be good to think about the best close and the best intraday highs if we're approaching resistance areas once more. So other things that we can see, 108 was a high point here. 93 was a gap level there where things started. Then we have a range here, a pretty small range between roughly 78 to about 88 or so about a 10-point range here. Looks like we also have earnings coming up soon too as well, so something else to consider. Recent lows here, 69 and 61. We haven't really tested those yet either. For now, we've held a pretty consistent floor near this level around 78, so that seems like a potential point for traders to keep their eye on going forward. We are starting to kind of slip below our moving averages a little bit here. They're kind of being dragged downward with our range-bound price activity. Moving averages tend to cluster together and drift sideways along with price. It takes a while for them to catch up. They are lagging indicators. That's one of the kind of inherent drawbacks of them here. But we can see that for now, the trend would be more geared toward the downside, though earnings could very quickly rewrite that story. Momentum compressing here, pretty common as we head into earnings once again. So not too much to make of that in this case. Our volume profile shows here we have a node near 81 to 88. We're starting to drift below that level. There's another pocket of activity here, 70 to 76. Beyond that, 54 and 46 to the downside is another important range here, 110 and 117 to the upside. A little lump of activity there as well.
Yeah, right now trading just below $80. And like you mentioned, they've got their earnings coming up on Monday. So a potential catalyst for this name for AST Spacemobile. But Tim, thanks for always being with us, bringing your picks for the big three. That's Tim Bohen, the chief technical trainer at StocksToTrade.com. And of course, Rick Ducat, our lead market technician, for always breaking down the technicals for us.